Alright, hello again, this is Franz, thetrendtrader.com. Let's take a look at markets here for the second week in January. Not a lot might have happened, or you might think not a lot happened, as the markets have only been active for like a week and a half. But it's usually at those times where people are taking a long vacation, or it's a holiday in some countries or whatever, where you have some market movements that could set the tone for the coming months. I'm not saying you can get rich on those days, which you can never, but there are some days that have these characteristics where some kind of a changing movement or kind of a changing atmospheres in the markets. And this week has been interesting in a couple of them. Here's the Euro Yen. When you take a look at this week's candle, it's only the second week of January here, January the 12th. And as you can see, this candle here is quite massive compared to what happened at the end here since September in 2017. This has been more exciting already. You have a market coming down all the way to the green line, but massively bouncing off and closing higher than the previous week opened. So for me, this is bullish, even though the momentum is not supporting that right now. We're still staying above the balance zone. Price, in my opinion, is still up. Monthly chart is up. We are holding the position. We are always happy to be long in a market that comes down like this and then retraces into the trend direction. So second week of January, in my opinion at least, in the Euro Yen, really showing us that it wants to continue up. It doesn't mean that it's going to do it next week. It doesn't mean it's going to do it this month. But it has a chance to move higher and continue that overall uptrend, always when it bounces off of the balance zone, just like this. So that is a new development in the Euro Yen. Euro's interesting overall as the Euro dollar is breaking out. We have been mentioning, or I have been mentioning, in the year of 2017, it was actually in the middle of the year, June, July, that the market is coming up into this resistance. After moving sideways here, making that new low over here with a massive divergence, we were talking about that back then, it moved into this resistance, but it didn't really react on it. It actually exceeded it quite stably, came back a little bit, but not even all the way down to the blue line, which means we're not in a big type of a correction, we're in a smaller type of a correction. And this took a while, and now it's the beginning of 2018, and we're breaking out on top of this fractal over here. And simply by the I'm sorry, simply by the amount of candles that you see here, you can conclude that the monthly is showing you a fractal here, and we are breaking out to the upside overall now, which is a very strong indication for higher prices in the Euro US dollar. And you can see it here. We are now in the monthly chart, and you have your fractal right here. It's triggered. It's the first one that occurred above the balance zone, and it's now triggered. No reason to believe that it's not going to move higher after breaking out like that. It would really have to close down much weaker throughout the next couple of weeks, or till the end of the month, so that the monthly candle doesn't show you a bullish scenario anymore. But this week here, now it's Friday 9 o'clock here European time, you can see that the close is very strong, and the same kind of scenario as we saw in the Euro Yen. You have strong bullish prices on the longer term time frames. Euro US dollar even breaking out, and of course we're long with appropriate risk. Euro Swiss franc, we have been long this thing forever now. It's been very boring throughout here, but this week again a stronger week. Maybe the euro is picking up some speed in the ongoing trend in 2018. We have no reason to believe that we have to exit our position. We have no reason to believe to take out size. We're just holding it, and we are adding on add-on signals depending on how you like to do that. And with this strong close, we are expecting higher prices also, and maybe even rising momentum. You always have to remember what we're really talking about is a sequence of 5, again, not waves, but 5 moves, where the 5th move compared to the 3rd move will show you some divergence. And the thing is that once the move starts, you never know where this divergence will occur, and the beginning of the third kind of move compared to the first one will always look like it's the fifth move compared to the third one. And this is kind of the mistake here, that when something hasn't even started to get going, you always have indications that it has already ended, because the indicator, before it can make you the highest momentum high, it will first look like it's making a divergence compared to that first momentum high. But that first momentum high has to be exceeded in order for it to make a divergence later on. And this is where you get these 5 moves that I'm talking about. Not 5 Elliott waves though, right? We're looking for the momentum indicator to show us the moves. We're not counting the waves. We only want to see the moves in the aftermath. So in the Euro Swiss franc that we're looking right now, we have this, in my opinion, we have this first kind of move to the upside, which we see the momentum high in here. And now the market has kind of continued up, but it was probably correcting internally in a way that it didn't touch the balance zone, it didn't touch the moving averages. But we will see if we have enough power here in 2018 to really move out and establish new momentum highs. Now that would be awesome, because we're loaded on this already. We have a lot of add-on possibilities in here. And if it continued up, that would just make for a great profit right off the bat. And if you know some stuff about support and resistance, this is where we're trading right now. We've broken out of this base, and the next resistance levels are here in the 120 area, and then we have the next ones in the 123 area. But the real significant next resistance is in here at the 126 level. Let's see if we can get there and actually make a couple of pips here, and maybe even if this is a strong trend and a completely new bull market, even maybe, we don't know, we're gonna move much higher than this. So we want to follow our system. We don't want to interpret too much. All of what I just said is just opinion and interpreting the indicators, but all we actually do is buy the breakout as it's been marked, and then exit when we have our exit signal occurring, which is a fractal inside the balance zone getting hit. Until then, we do nothing. It's just interpreting whatever the price is doing and just, filling the time or whatever, I don't know. It's living with the market and seeing what the market is doing, but we're only reacting when the market is telling us to react. And that would be whenever our entry signal or our exit signal is hit. Until then, it's all just thinking and opinion and thought, and it has nothing to do with what we actually execute in the market. And that's very important, because if you execute your opinion, you're not gonna make it. You've gotta execute the system that you back tested. Now, taking a look at the metals again, has been quite a long time since we did that. Gold, maybe a little bit on the move here. I don't know. The last couple of weeks have been very strong, trading at 1338 right now, just before the Friday close with this thick black line here. I've actually marked the breakout. Let's see if it gets hit in the coming months. And I have a buy order in for this right there at the fat black line, which is a very, very bad trade location. As you can see, it's so far away from current price. But since there is a little bit of volatility in here, even though it doesn't feel like it in the day-to-day trading, but when you look at it on this higher time frame, you have this big side move, and this side move is actually giving you a bad entry location, and therefore you get a bad stop location, which means you can only take a small position in order to fill your risk. You don't want to get too much risk on this, because we don't know if it's really breaking out. Same is true for the silver trade. When you take a look at it, we have been moving up in its initial move. We have been talking about this here in 2016 and coming into a correction, and now with this huge candle failing to go lower. And when you see something like this with a huge wick with so many divergences here before, look at this. This is your lowest momentum peak, and the price is going lower lower over here, but your momentum is not gaining any speed, so you have your divergence in there, and ever since that we haven't made a new low. Instead, we get this huge candle with a wick that's rejecting those lows that already before, right there, here, didn't produce any momentum. So usually when the price is moving higher and breaking a fractal, what you get is a continuous move to the upside. And despite those failed breakouts that we saw all over the place in here, we are buying, or I am buying, at the latest here when it breaks this high. But of course the monthly break here is the actual significant breakout to the upside, and it's only $3 away at 21. We are now at 17.23, so a little bit more than $3 away, but I think we can live with that as the prices are moving higher and probably establishing a new bull market in here. If this is hit, if this sees momentum, if this sees enough trading. Maybe all the money is going into crypto, I have no idea. But this is what technically is setting up in the commodity trades. US dollar yen, US dollar in general, looking pretty interesting. We are actually shorting this here right as of now, as this fractal is is just about to be hit. We were long as this fractal here, or let's say not the fractal, but the price exceeded this one, this fractal here. We went long, we got stopped out. I posted that last week, exited with a loss, and now we are taking this market short. Why do we take it short? The long failed, and on the monthly chart we are re-entering the possibility of hitting this fractal here. Now, right now on the monthly, this is not a good trade location because we're in the middle of a side move. You might as well choose not to go short there. But I always do it. I like it. I take a very low risk and I know what I'm doing. Therefore, this is a position that is okay with me. But it's not in a situation right now overall, this market, where you can assume the trend to simply get going right away. Oftentimes, by taking these positions, I get caught up in the market very early and I have to wait for a very long time to unfold. Therefore, this might not be suited to you. You have to really get a grasp on breakout signals yourself to judge whether this is the right time for you to enter. The monthly chart is just turning around after having failed to go higher, not successfully breaking this fractal and not even reaching this one right here. So now we're coming back lower, but we're in the middle of, the middle of nowhere, you would actually say, because we're trading in the right on top of the balance zone. As you can see, there is pretty much a very, very tight range of the balance zone here. You can't even see the different colors of the moving averages that make up the balance zone because price is so undecided, and it doesn't show you any regard for wanting to establish a trend. I'm taking the fractals here. I take them as I buy, I take them as I sell. I try to filter them a little bit, but I'm not even putting too much guesswork into which one I should filter and which ones I shouldn't, because I just want to be there when the market breaks out. If you are conservative, you would be waiting for these extreme fractals to be broken right there and right here, even though here you got knocked in and got knocked out right away. Breakout to the top failed. Now we're going lower again. Maybe. Let's see. I have no idea. I'm just taking the trade with very low risk, and if it works, it works. If it doesn't, it doesn't. It doesn't even matter to me, because risk management is what decides over you making money. It's not if you were right on the trade or not. It's how much you lose when you lose and how much you win when you win. And as long as you have at least a 2-to-1 ratio going on, over the long term, you will win, you will make money. And the trades you take don't even matter, it's like, as long as you follow your system and the most important part, risk managing, you will be coming out on the winner's side. That just takes a lot of waiting, a lot of discipline, and it's really kind of boring, Moving on, US dollar Canadian, another US dollar forex pair. We have been coming down right here, moving up into the balance zone, and the black line here would have been a nice long signal. It was never hit in my chart. Depending on which forex broker you have, you might have been hit there and you already exited below this fractal here. So you're taking a loss in the US dollar pair, and this here, or if you are aggressive, or right here, gives you an opportunity to sell the US dollar Canadian as well. The monthly chart would be going below this massive turnaround divergent or hammer bar, pin bar, and if that is broken to the downside, I think we have a possibility for this market to move lower, because we are establishing a breakout, the first one ever since the market went into this correction, below the balance zone, and a follow through to the downside is absolutely possible. Even though to me this this could go both ways, you know, I have no idea. Maybe long, maybe short, I don't even care. I just put in the orders and manage my risk, and I know that I'm gonna be alright, even though this might fail. I don't know. Again, as I said, you might be short already, or you can put in a short below here. That would make you actually take a very small position, because your stop is so far away. Stop in the balance zone would be very far away on this. But anyhow, that's how trading goes. Sometimes you get a great setup, sometimes you don't. If we take a look at the S&Ps, we are looking at something like a great setup. What more can you ask for than a 2008 starting out like this, with two weekly candles moving away from the balance zone? You can really see how this is going parabolic here again. The S&P really doesn't like to go parabolic. It usually comes back very quickly. And remember, before we get out of a trend like this, we will always have a fractal inside the balance zone. That means when the market is going as high as this, it's nice, but we're not gonna get out there, you know. We're gonna wait until it drops back, gives us a fractal. That's where the stop is gonna go, and then we hope that it continues higher. But at some point, of course, it's not gonna go higher. It's just gonna fail and stop us out. In the end, with an entry, the first one marked here, not being in all of that, and then in the end missing again, you know, the distance, kind of the distance just compared to that, we get like 70-80% of the move. We're not gonna get out at the top, we're not gonna get in at the bottom. That's not even what we're here for. What we're here for is to ride something like this and add on in something like this. And when you just see when this fractal here got hit, that was in November 2016, and that's the date since we've been long, and we've been adding on, and we are just holding the position. And the higher it goes and the longer it continues, the happier we are. As this is moving higher, of course we have a momentum going higher as well. Usually we are waiting for divergences to appear, but the crazier this gets, you know, the further away theory or market theory moves from what prices are actually doing. I'm not saying that it doesn't work anymore to look for the divergences and so on, but when you have a trend like this, when you have positions on in a trend like this, and you're making money like you are in a trend like this, which is serious stuff, you always gotta distance yourself emotionally from these kind of profits and from this kind of change that it does to your account size, because you don't know when and where you're gonna get out, and you never know if in the worst case scenario, and I'm really talking extreme now, but what do you know if the Third World War is gonna break out soon, you know? And this might get hit by that, and then, you know, your divergences aren't worth anything. I don't wanna exceed that into a kind of ridiculous extension or scenario or anything, but I'm just saying that once you make money like that, always, you know, anything can happen at any time. And the market moving out here like this, with momentum highs like this in the S&Ps and in the indices all together in the US, I haven't seen this before. This hasn't been seen before, not even in the 90s, where you know, a trend is already moving, a trend is already making divergences, like here. This is a usual S&P trend. Here you usually get a bigger type of correction. The momentum indicator goes below the zero line, and then a new setup appears. It goes long or it goes short, you will see. But this didn't happen here. It's like this was a small type of correction, which should have been deeper and longer, but it wasn't, and now we're continuing with the parabolic move, making a new momentum high. Now what is that? I don't know what that is. I'm just following the price and following the market, and I'm enjoying these profits, but I'm just saying, always be cautious, never get arrogant, never be too deep in with your positions. You always gotta watch out. And this new momentum high feels great, it's great, but at the same time, it's like, you know, it's also pretty scary. You don't know what's gonna happen. You never know what's gonna happen. And only if you can accept that and not follow any stupid guru who tells you what that means or not means, you are able to manage your emotions and therefore being able to manage your money as well. Without managing your emotions, you won't be able to manage your money, and following any guru's advice or guru's view here because you're so hyped up, you want to make more and you want to make more and you want to make more, it's not gonna end well. Don't see that bullishness all over the place. Here's the DAX. We got stopped out in the DAX as the market broke below this fractal here. Was long from down here, it went here. Now this fractal got hit, I am out. I got a new long position in above this fractal. This week hasn't been doing anything, so just waiting for it to get hit. Always of interest in the past, also Nikkei. Nikkei is a long, has been great last week. Here, as you can see, we are above this fractal, which has been an add-on position or add-on opportunity for us. And we're just staying in the trend, and the trend has been continued already in 2018. Doesn't mean that this week was the greatest, but who cares? Let's just hold on to the position and do our thing, just like we do everywhere. The momentum here is just about to break out and make new highs. Remember what the monthly chart is telling you in the Nikkei. This is probably the most insane market that I'm looking at with you each week. We have been breaking out of this base. Where is this gonna end? You know, I have no idea. Purely technically speaking, this should go a long way, even though I see a sentiment being at like above 90%, everybody being long, everybody being bullish, usually not a good sign for a continuous uptrend. But we'll see, you know, we don't care. I don't care. Managing risk is all that matters, and over a long period of time, you're gonna beat everybody else. It doesn't matter what the other people are doing. You get somebody day trading for 3 years or 5 years, even if they catch that period where the internet boom or the technology boom at the end of 2000s is happening, or where that new technology is in, like, let's even say you're in crypto right now and you made $1 million. Can you keep that $1 million? Do you know how to deal with that $1 million? I don't think so. You know, if you made it in a short period of time, if it was a lucky move, you're not gonna keep that money anyway. And then people like I and people like the other listeners come in. If you have the time, if you have the discipline, you're just gonna reap these awards again and again, slowly, very slowly. You're gonna be there as the trends keep happening and all the idiots keep going short. And that's where we're gonna make all our money, and the others are gonna be wiped out. I don't see many people talking about shorting the S&P anymore. This was very different at the beginning of 2017, March 2017, June 2017. I had so many people in my Twitter stream telling me how wrong I am being long these markets, you know, and here I am still holding these long positions, and I don't see any of them tweet anymore because they're wiped out, you know. That's because they don't follow the price, they don't follow the money. They want to grab the money before it's even there, picking tops, picking bottoms, you know, pointless. Alright, that's it for the week. I think we are setting up some very interesting stuff for 2018. Very excited to see where it's gonna go. Hopefully you got something out of this review, a little bit of jibber jabber here and there today, but that's just how it goes, I guess, on a Friday night. See you soon. Hopefully stick with me. I know it takes a little while until I post weekly recaps again, but some stuff has to happen, you know, before you can post a new weekly recap. With daily charts this would be different, but daily charts are too noisy in this globalized world. Thanks for watching. Post a comment, like the video, that really helps, and I see you soon.